let's talk about tax deductions in general. Tax deductions are something that everyone has to have a basic understanding of. If you don't have a basic understanding of what the deductions are, you won't know to look for them or keep track of those records, which you'll need to be able to take advantage of them. Of course, we want to make sure in all circumstances that we're only paying that tax which is actually due. And deductions is a great way to ensure that we're getting the most amount back that we can. One of the things that we want to do, of course, is start off by defining what a tax deduction is so everyone is on the same page. And we're going to define a tax deduction as a reduction in the amount of income upon which your taxes are calculated. Now that's kind of complicated, but what essentially we're saying is that this is going to reduce the amount upon which we're going to calculate your taxable income. So if we're talking with a very simple example of a taxpayer with $100,000 of income, with $20,000 in deductions, the tax will be based off of the $80,000 remaining. With this very simple example, let's look at the two major types of deductions so we understand the difference. The two major types of deductions are what we call deductions for AGI, or deductions for adjusted gross income, or deductions from AGI, deductions from adjusted gross income. And this is a very important distinction, and we'll take a look at this after we make a little bit more of a definition. So deductions for AGI is going to be things like all allowable business expenses, certain losses from the sale of property, contributions to certain retirement plans, things like alimony. And these are going to be what we refer to as above-the-line deductions. The reason this is more favorable is an above-the-line deduction is going to reduce your AGI, or adjusted gross income. Your adjusted gross income will have an influence on how certain other taxes are calculated down the line. Therefore, deductions for AGI are going to be more advantageous. The second category is what we refer to as deductions from AGI, or deductions from adjusted gross income. These are going to be those deductions which are subtracted from the adjusted gross income which we've previously calculated to arrive at what we define as your taxable income. These are going to be those things that, as we will refer to, are itemized on Schedule A. So if many of you have heard these terms in the past, such as itemized deductions or Schedule A deductions, this is what they're referring to. Alternatively, those taxpayers who don't have enough itemized deductions are still eligible to take a deduction. And this is what we refer to as the standard deduction. In such cases where your itemized deductions do not exceed the standard deduction, or you don't have any itemized deductions to take, we would still have this standard deduction available to us. Some of the itemized deductions that most people will be familiar with, and most people can take advantage of on their taxes, are things like medical and dental expenses, taxes paid. These would include both state and local taxes, things like real estate taxes, personal property taxes, that much you might have paid on your vehicle registration, for example. Other things might be deductible interest, so interest paid for investments or interest incurred in the purchase of a home. Your home mortgage interest deduction is a good example. Another major area would be things like charitable contributions. These would be both cash and non-cash charitable contributions, of course subject to substantiation by the taxpayer. Finally, we move on to certain other things like employee job expenses, those things which your employer may not have reimbursed you for, but you still had to incur as part of doing or conducting your business. And then finally, and hopefully none of you have to experience this, casualty or theft losses. Anything ranging from an earthquake to your home burning down, there are opportunities for you to take deductions based upon this. Now, we're going to refer to these deductions from AGI as below-the-line deductions. Remember, we defined previously deductions for AGI as above-the-line deductions. And the difference, again, is going to be the fact that deductions for AGI, those above-the-line deductions, are going to be generally more advantageous because of the effect that they're going to have on later calculations for your taxes. A basic understanding of your deductions and how they might apply to you can end up with a large tax savings, which is very important to you and your family, and of course to your long-term financial planning. Many of these resources are available on the IRS's website, www.irs.gov. Alternatively, you should be contacting your tax accountant or other professional advisor for advice with these issues.